Okay, let's talk about step one. The first thing you need to know if you're looking at buying a house or a refinance. What you need to know, and we're starting with the simplest, most basic things possible because they come into play later. First off is your income. After your income is your credit score. Your income is only based off of your tax returns and what shows on your tax returns for the last 2 years. Therefore, if you came across a hole in the desert where there was $1 million and you wanted to get a mortgage for a $5 million house, that $1 million will not qualify. You'll have to show that you made enough money to qualify for the mortgage without that $1 million included. Now, if it's like a down payment and it was a gift from someone, whoever gave it to you as a gift will need to write a letter saying that they gave you a gift of $1 million. Money that can't be traced can't be used. Money that is on your tax returns, like let's say you worked overtime the last year. Well, unfortunately, you need to have been working that overtime for the last 2 years for it to count towards what would be later calculated as your debt to income, your DTI. Therefore, if you're working overtime because you want to qualify for a mortgage, make sure you've been working that overtime for 2 years. Now, if you're working overtime to get more money to put on the down payment, that's fine. That's good and dandy. Now, the other one is credit score. This one's really important. Very important. Your credit score is going to determine what rate you get because it tells the lender what kind of liability you are. Obviously, it goes without saying, the credit score you want is the highest possible credit score. Now, if you have a 780, that's pretty much an 850. Now, literally it's not, but some lenders, the rate you get at a 850 is pretty much the same as it is sometimes the same as you get at a 780. Other times the rate does go down more and you get a better rate when you're at an 850. So you want this high of a credit score as possible. Now, different products require different credit scores as a minimum. So if you're trying to refinance your house, you want with some lenders you want a 680. You need a 680 to qualify to refinance. Other lenders, like, you need a 620 to get a home equity line of credit. For an FHA, that's one that you can have in the 500s, like the upper 500s. Now, for a VA loan, you're going to want to have at least a 620, if not a 640. It depends on the amount of the loan you're getting for VA. So if you have a 520 credit score, you're not going to even qualify if you're looking at a VA loan. So credit score, incredibly important. Income, incredibly important. Knowing how they use those, we'll get into that more here in a little bit.